I want to say happy Friday, but it's just bad news on top of bad news. Take a listen to what the director of the National Economic Council, Kevin Hassett, said on CNBC earlier about this new jobs report.
On average, it's about what we expect to be seeing because immigration has gone down by so much that break-even employment is probably in the sort of 30 or 40,000 jobs a month range. And so, yeah, I think it's consistent with everything else we're seeing, which is that the economy is really strong.
He also pointed to productivity gains, saying it's the highest we've ever seen. Justin, is that how you're reading this report?
Mate, Anna, you know me, I'm an optimistic fella. I can barely crack a smile today, and happy Kevin's over there giving us a giggle. Look, the thing he didn't say, and this, I think we weren't promised this, it's much worse than they said. The US economy has lost jobs since Liberation Day. We're going backwards. The unemployment rate's been drifting up roughly half a percentage point during the Trump administration so far. Anyone who says that this is remotely according to plan is simply lying. They promised us Liberation Day, they promised us economic growth, they promised us an expansion of opportunity, and instead people are finding it harder to find work right now. They're not getting the raises they need, their careers are stalled, kids coming out of college are finding it hard to get work. No. This isn't happy. It's not what's expected. It's not what's promised. It's not something to be happy about, and it's not something to smile about.
And now
sorry if I seem cranky, mate.
We're seeing stocks begin to spiral this week. It continues to tick downward today. If you're nearing retirement, how concerned should you be?
Look, this move in stocks is actually really quite big, and it's quite big. Today, the stock market is moving because of what we learned today about the job market. And so what we learned is that the US economy is either on the precipice of a recession or there's some possibility already in one. Things were much worse than we anticipated even just a day ago. And then if you've got money in the market, the other thing you would have noticed is we started a war with Iran, and that creates all sorts of economic gyrations beyond the geopolitical and the security ones, which means that things are very much at risk. Look, mate, if you saw an economy teetering on the brink, the only advice I'd give the administration is don't do anything rash, don't do anything silly. I have a feeling that advice may have come a week too late.
We have oil prices soaring, Brent crude oil $90 a barrel right now, and Qatar's energy minister told the Financial Times that this could get much worse, reaching $150 a barrel in the coming weeks if tankers can't get through the Strait of Hormuz. Can you put that into some perspective? How significant would that be, and what could that mean for gas prices?
Right. A very simple rule of thumb is that American gas prices rise and fall with the price of oil. So at this point, it looks like oil prices are up about 50%. You should expect gas prices to rise about 50%. Gas at the beginning of this adventure was about $3 a gallon. If oil rises 50%, you should therefore expect gas to be a bit above $4 a gallon. So if you get an opportunity to stop by the president's gas station where he's seeing it at $2 a gallon, definitely fill up, maybe even back a tanker in there and take as much gasoline as you can. But Anna, the thing I want to emphasize beyond how it's going to affect you and me and how much we pay at the pump is war is so much more than just what happens to oil prices. There is a lot on the line here. There's not only young men and women's lives, there's also America's position in the world. There's future defense spending. There's how long we're there. There's an enormous list of unknowns. And the unfortunate thing is the list of things that could go wrong is just a lot longer than the list of things that could go right. I don't know what we're going to draw, which of those lists we're going to come from. I hope and pray it's the things that might go right, but we should prepare as if we're going to get a draw from the list of things that could go wrong.
Yeah, if we're preparing, what else should we be looking at? If this key shipping lane, for example, is not functioning, what other areas are we going to see impacted, and how soon could we feel that?
Yeah, so the most obvious impact of the war, and the first one that people are feeling, is what's going on with world oil prices. People hear the words Middle East or Iran, they think about oil. Look, I've got good news for you here, but it's only semi-good news. The US is, roughly speaking, oil independent. Now, we import some kinds of oil, we export other kinds. It's slightly more complicated than that. But actually, on net, we export petroleum products. So what that means is that you and I are paying more at the pump. That's the bad news for you and me. But the folks in the oil fields in Alaska, in Texas, and other parts of the country, the price of what they produce just went up. So those folks are doing better. In fact, they're doing better roughly in equal measure to the amount that the rest of us are doing worse, which is why America on average doesn't get hit too hard by the oil channel. That's where you want to think about these other channels, though, if there's going to be a loss of confidence, if our security arrangements change so that the next generation has to spend a lot more on defence. Those are much longer running, slower acting things. We don't yet know, is this just in and out, which is what the administration hopes it is, or is it a much longer engagement that will be much more costly, both in economic and very human terms?
Professor Justin Wolfers, as always, thank you.